Good morning, Steve Free in Chicago with the morning grain comments. Well, markets are trying to be a little bit higher with beans up about 4 cents, corn up 2, and wheat anywhere from 11 to 17 cents higher. Stock market's higher, the dollar is lower, crude's a little bit lower, gold, silver, and copper are lower. I think from a weather standpoint, most people feel that this week, over the next 7 days, will be warmer and drier than normal across most of the Midwest. Still too much rain in parts of Kentucky and that area down there in the Ohio River Valley area. The EU continues to be warm and dry. France had their driest July on record. The question mark pops up as far as the 2-week forecast is concerned. I think that the European model shows normal rainfall, moderate temps, while the American model is still trying to keep conditions dry and warm in the Southwest, Midwest. Though if we see any pattern change at all, it might bring in some warm and dry conditions in the Northwest Corn Belt, where crop conditions for the Dakotas are better than trend and better than a year ago. We did have a private crop estimate come out. This estimate is based on data and suggests what the final U.S. corn and soybean yield might be versus what the USDA might say on August 12th. Their bean yield was 51.3 versus 51.5, and you had 61 bean yield in Iowa versus 62 last year, and 65 in Illinois versus 64 last year. Their corn yield 176 versus USDA's 177, had an Iowa corn yield of 207 versus last year's 205, Illinois 200 versus 202, Nebraska 175 versus 194, Minnesota 185 versus 178, and South Dakota 157 versus 139. We also noted that the Europeans are talking about the possibility of a corn crop as low as 55 million tons versus USDA's 68. There is talk about Europe taking in 175,000 tons of corn from Ukraine, 400,000 tons from Brazil. The EU wheat exports to date are up about 12% from last year. And then we have the headline that Russia accusing U.S. of helping Ukraine in the war. There is resumption of Ukraine grain export, but only one vessel, and that vessel's quality is in question. We'll just have to watch the pace of exports. Certainly the wheat and corn market has been pushed lower and near season lows because the expectations of increased exports out of Ukraine. Dalian soybean and soybean oil futures were higher, while soybean meal and palm oil were lower. Funds yesterday, sellers of beans, oil, corn, and wheat bought little meal. Again, their total position has been reduced dramatically from the May highs, and I think most will stay out of the market in the grains as far as buyers until the September crop report, when the USDA comes out with their official survey yields and production. So in general, we're just kind of buying time, watching to see what happens to China, what happens in Ukraine, the Fed action, and also weather across the U.S. Midwest as we wind down the corn and soybean year.